What's going on, guys? Brian's here. Today is Friday, July 15th, 2022, and the market is open. Another video being recorded today, and I'm hoping to get this one out within the next couple days. Guys, there's a lot of money to be made in the stock market doing very little. Using the right information, you can build solid trade ideas that don't require you to overtrade. You can train yourself to think a little bit more methodically and think about solid trading plans. It doesn't mean you necessarily have to cut out scalping or cut out your day trades if you're very successful at it. If you are, this video will be a way for you to expand your trading knowledge. So let's start by looking at Tesla right here, and let's jump to the intraday time frame. So I will be talking a lot about levels that are provided by Quant Trading app right here. I am the lead developer on Quant Trading app, so full disclosure there. It's a platform which you can access at quanttradingapp.com, and I will be talking a little bit more about that later. Every single level in which you see on my chart is generated from Quant Trading app. So these levels right here, these colored levels, are from gamma. So these are the gamma levels. So this is an absolute gamma level. This is the highest positive gamma strike from pre-market, and then there's a highest positive negative gamma strike from pre-market. It's not showing right now because it overlaps with another level. This blue level right here is referred to as max pain. Max pain is the strike price at expiration, so in this case today, in which there would be the least amount of combined net intrinsic value in the options chain. So think of it this way: it's the strike price in which anyone that's a buyer of a call or a put would lose the most amount of money. Max pain theory says towards the end of expiration, price will generally gravitate towards that stock price. Now, that's not necessarily always going to happen, but it's just a good measure to have on your chart as it acts as key support and resistance throughout the week. This buy zone right here that you see is from the Quant Trading app algorithm, and then these intraday levels are also like intraday buy and sell zones, as well as levels to take if price was to break past it, come back and retrace, and then you can continue for the upside momentum. I've done videos before on the break and retest strategy. Actually, my favorite momentum way of trading, I like to wait for a pullback into a level before I continue to the upside. So that right there is the break and retest. So that's what this intraday level is kind of here for, or at least the way in which I use it. If you're a momentum based trader, guys tend to scalp it up to that level and then take profit there. If you're a version to the mean trader, you can trade it coming back down to back to VWAP again, just like any other traditional support and resistance level. So it's kind of outlined right here on the chart. All of this is drawn in automatically, and this right here is the 2-day anchored VWAP. So as I've gone over all the levels on my chart, again, nothing of which I've drawn in. If we were to just turn this off if we were just turn off all the studies, you guys can see it's a clean chart, and this is all populated straight from QTA. QTA just stands for Quant Trading app. As we move right along right now, gamma levels are very important whenever you're trading, and I'll explain a little bit why. But this is Tesla's current price. I want to rewind in time and take a look at Monday, because on Monday, as it sold off, it came down to max pain. Max pain, I believe, was about 720 at that point. Let's just say you don't use an algorithm that generates levels like this for you. An alternative could be something like the volume profile. So let's just say we were to come to this chart right here and draw out this point of control. I've done previous videos on this, but this is just to add a little bit more confluence and a little bit more context of things for those of you that don't have access to the same levels in which I have, or you just don't use the same things in which I use. So we have that, and then let's draw out a demand zone right here. So let's draw that out. I've done previous videos on this subject matter also, so I won't bother changing the color for now. So let's just jump back to the 15-minute time frame. So here we go. We have a zone, we have a point of control. Max pain is something that is available. I believe there's an app called the max pain calculator or something like that, so you can always Google maybe what's the upcoming max pain for the week. So there's different ways to at least find out where the max pain is, as well as you can use your own eyeballs, or you use your own experience to draw out your supply and demand zones. So the thinking behind this video, which is what's most important here, it's not necessarily about the individual setups and everything like that. It's about the broader thinking, trying to expand your approach, or at least how you think about the market, to potentially create some sort of passive income for what you do, or just to add to your balance sheet at the end of every month. Tesla sells off. This is a huge drop on Monday. This is a huge drop again for Tesla. If we were to take a look at Tesla's ATR, let's just go to FinViz, type in Tesla, and then take a look at its ATR right now is about 40 points. So let's see what this move was right here. So from this level, at the point in which it caught my attention was here, it's already down 40 points. So full ATR. It did about 2 ATRs this week right here across 2 days. So that's kind of generally going to be close to, probably the bottom for a Tesla, for a stock such as Tesla. Anything past that, it's getting extremely oversold. ATR just means the average true range. You can look that up in other videos, or maybe search on Google or check out Investopedia to learn a little bit more about that. So a 40-point drop on Tesla to start the week off is kind of uncalled for. On top of that, it sold off right into the max pain level. So it immediately caught my attention. And as we pull this up right here, so 720 was max pain. This is the Quant Trading app Discord right here, and this is on the 11th. So let me just make sure that's the same day. So this right here, the 11th, on July 11th right here, Monday morning, Tesla sells off. I'm obviously going to catch my attention. It's going to catch any trader's attention because Tesla is one of the highest beta stocks. It's one of the most traded options chains on the market. So take a look at this right here. 700 is absolute GEX for Tesla. So we'll talk about that in a second, but this is just saying this is absolute GEX for Tesla right here at 700. And we can see that the max pain was at 720, and that's what's labeled right here as this blue level. Spot price was this right here. It had just come down to the max pain, so it caught my attention. As soon as that happened, I was thinking about potential trades to potentially run for it, because the thinking would be, if it's already sold off a full ATR, it's coming into max pain, we have a demand zone below it, we have a point of control below it, we have a potential buy zone right here. How much low is it necessarily going to go? And if it does go lower, chances are it's going to come back to at least this level to retest it at a later point. That's generally the thinking. Price does not just touch a price once in its lifetime. It's generally going to touch it again, even if it's just a few minutes later, or more than likely it's going to be a couple days later, or maybe a week later, sometimes even a month later. It all depends on, obviously, if something is in price discovery mode. Price discovery is when it's at all-time highs. It can keep going up because it's trying to figure out where's the all-time high. Or if something is in a very aggressive downtrend, then it means it's already touching previous support levels and it's just breaking them on its way down. But the key takeaway is to know that generally price will revisit a level in which it's been to before. So if this is confluence of things, would be that this is max pain 720, the zone right here. If we take a look at gamma exposure on Tesla, so if we jump to this right here, this would be Tesla's gamma exposure. And let's just jump to, say, for example, something like next week, if we were to come up with some sort of trading plan. So these are the gamma levels for Tesla for today's expiration, but it's a 0 day, so the levels are going to be really tight and wonky right now. If we take a look at this chart right here, we can see we have some gamma levels up at 750, 765, 800s appears to have 1.1 million gamma exposure right here. So this would be the highest positive gamma exposure right now for next week, and this would be the second highest. And on the lower side, we have absolute GEX down here at 660. This video is not an explanation on gamma exposure, as that would require a little bit more of an explanation. I've done a couple videos on it before, and I will do a dedicated guide on it. But as we scroll down right here, just pointing out, you guys can think of it right now as supercharged support and resistance levels, but the absolute gamma exposure levels would be the levels that tend to act a little bit more as magnets, because there are levels of high liquidity, and price likes to move to areas of high liquidity. That will be explained in my general breakdown video of gamma exposure. So as we're looking at next week, we can say, okay, so we know that the absolute gamma exposure is all the way down here at 660. We can see that on the higher end, we have 750. So this is likely to act as some sort of potential resistance, and this could potentially act as some sort of support. In between, we have this level, which will also act as some sort of support. This is max pain right now for which is 700 for next week. If Tesla got below this level, one can say that maybe it will sell off to this level. It would meet some sort of support right here, and then it potentially will sell off to 660, depending on how much downward pressure there is. Earnings is also next week, so things are going to be a little bit crazy. If we return off the absolute GEX, and maybe let's just take a look at the open interest to get a little bit of a feel for the sentiment. We can see right now there's a decent amount of open interest to the upside. And lastly, let's just take a look at maybe the volume coming in for today. We can see that there's a little bit more call volume going into the short-term contracts. So for the next 3 months, there's a little bit more volume going into calls for Tesla versus puts, and we can kind of see that on the chart right here. There's a lot of hedging going on, or a lot of puts being purchased for the 700 level, because below 700 it tends to get a little bit scary. Above 700 it's not as scary. So that's just a little bit of analysis for gamma exposure for next week Friday for Tesla. If we come back to the Quant Trading App Discord, and then let's actually take a look at the gold chat. Let me pull up this, something I explained a little bit earlier this week, and then let's view this right here. So this would be on the 11th right here. So this is when this was generated. This is the 11th. This is the spot price for Tesla. So this is the current price in which the screenshot was taken. And by the way, this is all done automatically within Quant Trading App, and then these videos are just, these screenshots are just comprised into a video in which I did here to demonstrate this, how we can see how price moves as it gets towards certain gamma exposure levels. So this right here we can see is 715 right down here. We can see max pain. So as Tesla is moving up, let's take a look at this. You guys can see it jumps up, it hits the level, hovers around, gets rejected. It gets rejected, and then it comes all the way back down to this level right here. And then the 700 level is the absolute gamma level. So it has a lot of liquidity, and it's likely to be a little bit of support, as well as price is going to hover around this level for a bit. As you guys can see, we'll play that one more time for a second for you guys. We can see price is rallying, it hits this level, and then if I pause the video right there, let's just jump back to this point, and and as we see, it jumps right here. So this is just when the gamma exposure turned positive for Tesla right here. The gamma turned positive, which means volatility should be reduced. So this level right here is what's referred to as the gamma flip, which is 715. So it's a pretty important level to be aware of for Tesla. Now the reason I'm making this video is because at this point we have 700 level. We had the 700 level, which was the absolute gamma level. It's not on this screenshot right now, but it was the absolute gamma level. We have a lot of liquidity, a lot of open interest at this level, a lot of negative gamma. But on the other end, we have max pain right here, which is tugging on Tesla. We have a decent amount of open interest at this level at 750. So in a sense, it's stuck between 700 and 750. Price is likely to just be choppy within this area right here. And that's essentially what we're seeing as Tesla is bouncing around this particular day. We can see it chopping around. If we look at our chart, how can we use that to take a trade? If we say Tesla, or if we think Tesla's just going to be chopping around certain key levels for a while, this is 750 up here. This is the 700 level right here, which is now still the absolute gamma level from pre-market today. If it's just going to chop around this level, this is where you can enter in something like a spread. So if we take a look at this right here, this would be a calendar spread that expired this week Friday. All you're essentially doing is selling the call option, the 720 call for this week, and then you're buying the 720 call for next week, and then you're letting time decay just eat away at this option right here, which would have been at the money. As you guys can see, this I was saved at 10:35, so that was just a few minutes after I posted in the Discord. I did not run this trade. This was just a test for me because I generally don't like to run non-directional trades the week before or the week of earnings. And since Tesla's earnings is next week, I decided not to run it. Now obviously I'm very sad. This would have been a nice little P&L right here boost for the week, since I'm not having the best trading week because I let some really good winners go, as I talked about in the Microsoft video previously. But as we take a look at this right here, this is a great return right now. So 54%, let me just refresh just to see where it's at right now. So 52%, and this contract expires at the end of the day. So it still has time to make the market closes in about two hours and 10 minutes or so. So it has a chance to make another 50% if Tesla kind of hovers around here, which would be another $800 right now, which would be an amazing return having done nothing. If we take a look at this right here, this is an alternative. This is just an at the money iron butterfly, same thing, but this time going a little bit safer, just using the next week. We can see decent return. So if the max loss or the position size, because this is just the position size, the max loss is the position size, same thing like when you buy a naked call, your max loss is the cost of the call if you were to hold it all the way to expiration and you were wrong. Same thing in this case, if Tesla was beyond these break evens, that would be your max loss would be if you were way wrong, and let's just say Tesla was all the way down, it'd have to be all the way down and maybe like 650 or something, like you'd have to be 100 points off where you thought it was going to be. So you have a very wide range in this case for the max loss. But let's just say you would cut it, you're risking $300 to make 900, then it's a 3-to-1 risk reward ratio, and you're essentially just letting time decay chip away at the contract. But more importantly, you're using your judgment based on factors that are not calculated by yourself. Like everyone's aware of max pain. Everyone's aware, or by everyone I mean the market makers, anyone that's in tune with an options chain is going to be aware of these kind of key levels. So it's not left up to discretion to draw, okay, I think there's a trend line here, or I think this is a channel, upward channel, or I think it broke trend, or I think this is that. No, this is absolute GEX for today for Tesla at this time. So that means everyone is aware of this. Any type of market maker, as price comes down to this level, their machines, their algorithms are going to be gamma hedging aggressively, which means it's going to be very choppy around this levels as they're buying and selling, adjusting their book based on how much they have to delta hedge based on how much the gamma is moving. So all this is comprised and they all go hand in hand with each other. But for a trader, you can just say like, okay, well, I'll just let some time decay eat away at these contracts while Tesla figures itself out, and I don't necessarily need to do much for the whole week here. This is one particular trade. If we take a look at the iron butterfly, let's just say we were to run it for this week right here at the same time, which would have been the 11th. This was in the morning at 11th. This is how much premium would have been collected. So about $32 in credit would have been received. This is now going for $500. So in other words, this means you'd be up about $2,600 right now on this trade, having done nothing. Your P&L never really went red here. It just was a nice steady uphill. This right here doesn't really matter. This is just whenever the market first opens, generally these spreads have a weird print just because it's still recalibrating. So that's not necessarily an accurate read. But for the most part, even if it was, you're talking about being down maybe $100 or so with the chance to make about $2,000. And again, you're not guessing, you're not estimating, you're using you're using an advanced awareness or knowledge of the stock markets to come up with this idea. The max loss at this point would not have been this much. It would be 4,000 and change minus the 3,000 this spread has already made. So this probably would have been going for about $900 or so. So you're risking $900 or $1,000 to potentially make $4,000 or 3,800 or however the max profit would have been at that time. On top of that, let's take a look at another example. If we come to the option spreads here, and let's take a look at, I believe it was Microsoft a couple days later I mentioned. So this right here. So here we go. So I was swinging a small size on Microsoft, a 2-day till expiration calendar, just 2 for me at the time. At this point, I was just going to look to build into the position. So let's take a look at Microsoft on our chart. And again, just did a video on Microsoft, but now let's take a look at a different perspective of this here. This is this week. So a day later, Microsoft does this huge drop. Whenever a stock makes a big move, it's going to catch a lot of traders' attention. However, the way this dropped and it started forming this bear flag, what caught my attention, it was in the quant trading app buy zone. So there was a notification that went out as soon as, so like say for example right here, it just hit, Microsoft just hit support. So once that notification went out that Microsoft hit the buy zone, it caught my attention. I was just take a look at it, and then I started doing my research, start trying to see if I could find confluences. Is this a trade that I think will potentially bounce back up to here? Do I think it's going to continue selling? Obviously the pattern was very clear to see from a technical analysis perspective. This was a clear bear flag and a lot of downward pressure, and the way it was selling off was likely to sell off was very ugly. However, at this point I'm looking at this and I'm taking a look at it, and I wanted to take a look at it and decided to investigate a little bit further. And this is where I think of looking at the options chain is kind of looking at the stock market with an x-ray vision. If you're looking at price action, that's just the top layer. It's just looking at the skin. But if you can turn on an x-ray vision and see what's really going on under the hood, you can kind of see, or you get a little bit of a feel for analyzing this. And I've been doing this for a while. If you checked out some of my previous Tesla videos on gamma squeezes and things like that, I've kind of explained how you can read the options chain to see where the sentiment is, as well as when there's going to be a potential gamma squeeze. That's one of my favorite videos in which I've done in this channel, so I highly recommend you check that one out. But aside from gamma squeezes, if you can assess which side of the trade everyone is on, or as well as get a feel for where the market makers want price to go to be pinned towards the end of the week, there's tremendous edge in that. So this right here, this is the 13th now, so this is the next day. Let me just confirm that. So the 13th would be right. Oh, so yeah, so then it decided not to do anything here, but then on the 13th, Microsoft comes down to, this is referred to as the quant trading app 2 sigma level. So if you've seen any of the previous videos, this is essentially a very strong support level, and prices 8, depending on the ticker, 8 out of 10 times it's going to close above this level on a Friday. On certain tickers like the SPY, 9 out of 10 times it's going to close above it on a Friday. So it has a very high probability of closing at expiration above this level. So whenever that level hits, we get a notification, hey, you know, Microsoft is at the 2 sigma support level, maybe take a look at it. So as this happened, take a look, and then I'm seeing, okay, a little bit of buying pressure coming in and it's starting to look good. So I decide that 255 would be the level in which I would like to swing this up to. However, I didn't want to trade a naked call, as I had, if you've seen the previous video, I already swung naked calls on Microsoft, and at this point it's getting closer and closer to earnings, and I didn't want to go far out because the contracts were already starting to get a little bit inflated, and I didn't want to be in the trade for too long. So just saying right here, targeting 255, as you guys can see, this is what the chart was looking like. The reasons for the trade, targeting 255 because it is because of the GEX on Microsoft. So 255 was the absolute gamma exposure for Friday, so 2 days till expiration right here. And then this is taking a look at the same chart. A lot of liquidity in this level. Wherever there's going to be a lot of liquidity, price will naturally gravitate toward that level. If there's no catalyst, if there's no impending news, if there's nothing expected, if it's just going to be left alone and do whatever it wants to do, it will just naturally drift towards this level most of the time, right? So this is the spot price, targeting 255. Just about a 4-point, bounce. On top of that, max pain is above it. So max pain theory, if I believe Microsoft is going to rally this week, it has to cross at least 255 before it gets to max pain. So targeting 255 is a very conservative target. However, just being a smart trader, you can't just necessarily trade counter trend blindly, because the trend is very down right now for at least for the past week in Microsoft. On top of that, the overall market is in a bear trend, is in a bear market, which means everything is downtrending right now for the most part. So you have to be a little bit more safe, and you can't put much risk on these types of trades. So that's why I didn't want to be too aggressive, maybe targeting 260. So I target 255. The next day, however, Microsoft gaps down as the CPI numbers came out this week, and the PPI numbers also came out on Thursday pre-market. So all these catalysts are kind of breaking up a lot of really good trades right here. So the market sells off and it getting below 2 sigma. Generally, I'm going to take the stop below here. So unfortunately for me, I did take a stop loss on this trade. So it was a little bit upsetting, because as you guys can see, it actually worked out pretty clearly. Now, if I was trading a little bit better this week, I actually looked to add below 2 sigma. But again, there's so much catalyst. It's just been a little bit exhausting for the past few weeks. The first week that week when all the reports come out at the same time, or the week of FOMCs, it always gets a little bit noisy. And as a trader such as myself, I try to disregard the noise. And lately these days, I've been a little bit upset because I've been paying a little too much attention to all the macro news and all the noise. And at the end of the day, for a trade that I'm looking to take over the next few days, none of that is going to matter as much. Like, yeah, it's going to affect a little bit of a gap down, but if I'm managing my risk accordingly, this is a great opportunity to start getting long here, or at least wait for the next break over VWAP. Once it got back over VWAP or back over 2 sigma, there's reasons here to re-enter this trade, because now you have a new stop loss. And obviously if it goes back down below there, then the play will probably be dead, but you position size accordingly, because you guys can see it ended up putting an amazing rally all the way back up to 255. If we also just jump back to this day, so this was on the 12th right here, and to take a look at this spread. So this is a butterfly spread, and the thought process, this was saved on the 12th, so the day before. Again, just showing you guys the thinking as price is moving, what I'm generally thinking throughout the day. I'm just trying to weigh the risk reward, trying to see if it's worth the trade, because I could be in about 5-6 trades at any given moment, and if I'm swinging all these different trades, I don't want my my open positions to start getting a little bit too cluttered. So if I'm going to open up something like this, then generally I want to take some profit on another trade, and then I have to see if it's worth it to open up this one and XYZ. But I didn't take this trade also, so that's why it's just a test. This is a 3-day till expiration swing right here, and how it would have played out, because now we're looking at Friday. The thought process is Microsoft being right here, max pain was around here, and we had the absolute gamma around here. So just thinking it's just going to stay within this region, and this is right here at this moment. So you see it goes all the way down here, it does all this craziness, but at the end of the day, by Friday, it comes right back to where it's supposed to be. Again, from here to here, doing nothing during this time frame, a position sizing accordingly. So if you're trading spreads and you're just swing trading right here, it's a great opportunity to run something like this. If you're a momentum based trader or a contrarian or reversion to the mean trader, yeah, you don't necessarily need to swing, you know, a non-directional spread thinking it's going to come back to this price. You can just get naked calls at these levels, because the thought process is, hey, if this is supposed to be up here by the end of the week and it's all the way down here, maybe I'll just take the trade back up to that direction. You don't have to be, you know, trading. You can use the same information which I'm sharing right now. If you're watching this video in the future and you're just looking to expand your trading knowledge on gamma exposure or some of the other more advanced tools, because you're past the point in your career where you're just drawing out, you know, support and resistance and trend lines and things like that, and you're looking to get a little bit more in depth. I spend maybe 10 minutes a week at this point drawing support and resistance levels. It's not part of the core part of my trading. It's trying to grow, and it's the thought process and the thinking, which is why I'm sharing this type of stuff more on the content right now, because you guys can find out where to draw support and resistance levels a little bit easier. You guys can find, you know, very easy ways to draw trend lines. There's a ton of that, because it plays into the very easy, elementary, basic starting blocks of trading, and it's very easy to get people to be like, oh, if you just draw this here and you draw this here and you do this, and everyone's doing that, but it's very difficult for people to be consistently profitable and make a career out of trading just solely relying on their technical analysis skills, because it's very discretionary at certain points, and it's hard to have conviction or really believe in your own levels when, especially if you're experiencing a little bit of a slump as a trader and you're losing confidence. Now, if you have something that is quantifiable, or you have something that's not generated from yourself, this is generated from the options chain. You guys can see now it's coming into power hour here on Friday, so the market closes in 2 hours now, and we can see, look at where Microsoft is coming right back down to that 255 level. That's not it's not a crystal ball. It's not making predictions about something. No, this is a matter of a fact. This is the absolute gamma strike for this week's expiration for Microsoft. Whether it closes there or not, it's no one will know. All we do know is there's a very high liquidity at this level. On top of that, if we just come here to gold announcements, let me just see if I could find. So this is a little bit early in the week. So just pointing out this right here. So this is showing, this is early in the week. So this is on the 12th. We can see right now a lot of call volume at this point was going into Microsoft early in the week. Even as it was selling off, there was a little bit more call volume we can see. So as I just scroll, this is the open interest. There's a lot more open interest to the upside, but it went pretty high over the past week. So it made sense that the market makers, that it made sense that demand dried up here, and then Microsoft ended up pulling back. But you guys can see this was absolute gamma even when Microsoft was above this level on the 12th. So it made sense that it pulled back. All these calls lost a ton of their value. We can see everyone was buying a ton of calls. It's very easy to visualize this. And then I'm currently working on models that will aggregate a lot of this data and kind of build some sort of model that would anticipate whenever large moves are likely to happen based on what's been happening before. So all this information, this data is being tracked by Quant Trading app as I'm working on these models here. But for the most part, we can see it visually happening. As I just scroll, you can see when there's a shift in open interest. You can see when all the volume started coming back into Microsoft. You can see the support building right here as everyone started loading into these these puts, and then it's just bouncing at 250. This was it at 2 sigma down here at 248. You can see everyone's loading into these puts, and then these puts will expire worthless as they just bounce back into this level where everybody that was in calls lost a ton of their money, and now we're hovering right around this absolute gamma strike right there. So as we continue to scroll down, we can see the gamma exposure right now. Again, these expire now, so things start getting really contracted towards the end of the day because the gamma exposure is all close to wherever the spot price is. But we can see it's starting to get pinned right between max pain. So there's that 257.50 level and the absolute gamma level, and on a couple days ago that was the 257 level, 250 and 265. So thinking it would be right around here. It's not a crystal ball, it's not magic, it's not I'm not the greatest predictor or trader in the world. It's just looking at the data and looking at the information that's being provided to us, and then just coming up with the different ways to take trades. Now, if you don't know how to trade spreads, obviously you're missing out on a huge opportunity to capitalize on huge gains using small risk if you know what you're doing. If Tesla's too large, putting $900 on a Tesla spread, you know, if you're putting $900 in the spread, you're probably only risking maybe $300 on the trade, again, to make maybe close to $900. That's a 3-to-1. If you're taking a trade like this and you're risking, you know, this is your max loss per lot. So if you just do one, your max loss, you're probably taking a loss. If you're down $90, you're risking $90 to make about $300. And let's see where it's at right now. So 266 as it's starting to pull away from this level right here. But again, still, risk reward is immaculate on these types of spreads, and you don't have to do anything in the meantime unless something is going terribly wrong. You don't even have to. When I'm trading the same week expirations, I generally don't manage them as much. I would just cut it at a stop loss, just because there's such little time. It gets more annoying, you know, trying to micromanage it. Maybe, you know, you extend out the call or you add another butterfly, or it just gets a little bit more chaotic or a little bit more of a headache, and it takes away from some of my bigger non-directional trades on the SPX, which is what I should be focused on. So with these, it's just small, maybe 2 or 3 contracts right here, and with 2 or 3 contracts, who wouldn't like an extra $500, $600, $700 coming in by Friday? Just for letting passive trade work itself out, or, you know, scaling out accordingly. This right here would be early in the week, so this, you would have collected, you know, the $512 on the 12th. So as we look at this right here, here's the $500 and 12, because whenever I see this type of stuff, the first question I want to think is, you know, what was the max drawdown? How much pain would you have experienced? So even at this point right here, the max drawdown was about $100, so about $1 this contract, this butterfly increase, which is bad for you. And then you can see right here it's going for 240. So your max pain would have been $100. So if you're in 2 of these, you're down, you know, $200, and you're only down that because this is an extreme scenario in which Microsoft went all the way down below 2 sigma. This is not something that's going to be common. For the Quant Trading app members that are already watching this video, if you're already a premium member, then you already should understand a lot of this information which I'm showing right here. But I haven't got a chance to talk to you guys specifically about some of the spreads that I opened up this week, because you guys know I've been very busy this week working on the new features that have been rolling out. So I haven't had much time to explain necessarily all the trades in which I've been posting, or why I'm opening up certain trades. So I'm hoping this helps. It's a combination of max pain, the combination of the absolute gamma strike, the combination of the what was referred to as the N1 and P1 strikes, and you guys can see how these are all playing out beautifully for all different variations or types of traders. Great opportunity to potentially go short here today, thinking it would revert back to the absolute gamma, taking profit right here at the Quant Trading app buy zone, adding back below here. Again, if you're an aggressive day trader or scalper, there's so many opportunities here, as well as if you're just trading theta decay, swing trading from here to here, or trading from down here, the momentum trade back up. If we were to take a look at those contracts, this would be the 255 call naked yesterday. Can you imagine these types of returns just looking at this type of information? So here it is right here. We'll say about 50 cents. 16, 19 cents is not a realistic fill unless you're perfect and you just happen to get lucky. But I like to just use an average, because chances are I would get 50 cents, get a couple here, and then get the last one at VWAP, and then kind of hold. You build your way into the position. You're talking about maybe get, you know, a few contracts and your max loss is $250 right here. Give it a 50% stop loss, so you're maybe only risking $125 to figure out if Microsoft will return back to its absolute gamma or revert back to its mean. And look at the asymmetrical returns on a trade such as this. So from here at the open, this trade was already up 300 something percent, and as it actually started to hit the 255 level, these calls went in the money as it went all the way up to, how high did it go today? All the way up to 260. So it went about 5 points in the money. So these contracts had $5 of intrinsic value, And you guys can see again, max return on something like this all the way up here is over 1,000%. From the exact lows, it's going to be ridiculous, but I don't like looking at this too often. It's over 3,000% right here if you're perfect, and if you time everything perfect, again, which is not realistic. But more importantly, you guys can see what they're doing right now. Going into the OPEX, going into this expiration right here when these contracts expire, they're probably just going to have a little bit of intrinsic value in, because now they're suckering everyone that was buying these calls all the way up here, all this volume coming in. There are shorts that are now shorting these contracts up here, expecting it to revert back and then expire either at the money, but not too deep in the money, because that's what the confluence of all this information is showing us. The combination of max pain, it wants to close probably below this strike. If it's this high above it, if everyone's in calls above it, it's going to want to pull back to this level. If absolute gamma is down here, it's also another level that's going to be a magnet pulling it back down. The mean right now, the 2-day anchored VWAP is all the way down here, so maybe it's going to come back to this level. There's so much confluence of things right here just on 2 scripts generated. By the way, these are just 2 things that are copy and pasted onto the chart. Again, as I turn off all the studies, without it, it gets a little bit harder, I guess, to assess the context of things. You can take a look at the options chain and you can try to decipher. If you see a lot of people are all on the same side of the trade, maybe it will usually expire right where this bell curve right here. You can see there's a lot of volume right there, and if we take a look, there's a lot of volume right here. So generally where these overlap is usually going to be where a price is going to close, and we can see that again visually right here. If we you see how the volume is pretty clumped together. Same thing if we go to the SPY and we're curious to see where's the SPY going to go. This would be, let's go to the 14th. This would be yesterday. Actually, we'll go to, yeah, let's take for example yesterday. This is the volume. So you see all this clump, this is one standard deviation of all the volume. This is the spot price. So then price is going to struggle to go higher because all the volume is right here. And as we just scroll down, it's getting stuck. It's still at 375. There's not really much volume to the upside. The one standard deviation, again, which is the majority of all the volume, is in this range, and then we can see this price would struggle and would pull back. Now today we gapped up. This is the 15th, so we broke out from that. This is at the pre-market, what it looked like. This is after the market open. After the market open, it starts showing the volume, because pre-market there is no volume, so pre-market is showing the open interest. But we can see the same thing. This is where all the volume is, in a sense, going right now for the day. As it's getting past all the put volume right here, it's going to struggle to go a little bit higher. We have a gamma strike right here, which is 386, but 385 was likely to be resistance for the SPY today. So as we take a look at the SPY, you guys can see that right here, 385. It's getting stuck at that level because there's not much volume on the options chain, at least, to support it going higher. Easily seen on the options chain, but if you're using a tool such as Quant Trading app, I'm just trying to make it a little bit easier for traders to decipher this on their own, as well as have clues throughout the day and make it very easy and visually represent and make it very easy to visualize, because this is ready. If Tesla was to break over 750 next week, and these are exactly what the same levels would be come Monday morning, then it's very likely to be a good scalp candidate up to 765, because there's not much gamma exposure between those levels. If you're curious to know how much the gamma is between those levels, that's where this comes into play, and we can actually see this the same thing if we turn off all of the volume and we just take a look at the gamma. If Tesla's over 730, I would expect a scalp up to 740, a break over 740, and we have a clear scalp up to 750, because there's not much gamma in between those levels. You guys can see this right here, a nice decent scalp off of those levels. So the levels are provided on the Thinkorswim charts, but if you don't have access to Thinkorswim, this is where the website comes into play, and they're drawn out on the chart for you. So you can just keep this open and then refresh the page to see how it calculates. And then at the bottom here, this is for a little bit more of a deeper analysis, as more is coming to this page right here, as well as a little bit more of an advanced look into a lot of this. I'm constantly developing and working round the clock on getting these types of features integrated, because if you don't know, if you're new to this channel, the goal right now for me is to have at least 10, no more than 20 solid trades a month, and just keep the same risk on each trade depending on the setup, and just get asymmetrical returns only if the data supports the confluence or supports the trade idea in which I see, and relying less and less on discretionary, playing the probability, which is really how professionals trade options. It's based on the probability of success. It's not necessarily just based on what they think is going to happen. Hopefully this video opened up your mind a little bit more to different approaches to trading. If you enjoyed the video, like it down below, leave a comment, share it with your friends. I look forward to hearing you guys. Link to the Quant Trading app Discord is in the description down below. Link to Quant Trading app itself is also in the description down below. Catch you guys in the next one. Take care.